Welcome back, everyone. This is the metal markets. I'm Marcus Stalker D, and we are through the first heat wave in the UK. I don't know what's going to happen with the second one. Maybe we do Globex, because the office was actually pretty cool at night. So that could be something if we have another sweltering hellhole of weather. I'm pretty sure I saw a couple of demons running around somewhere. All right, so I did some late kind of Asia trades this morning. Ooh, this was a doubling up of the bot. So you just saw the bot kick off some positions, and I'm going to just do that. Interesting how late that starts, considering I'm on a 5-minute chart. But yeah, so me and bot are in agreement, clearly, because I am looking for a fade of crude oil. I know it's the metal market show, but we trade crude oil here as well. So I'm looking for a return, a sell-off back to the 70 gamma wall, but really, if we get anywhere sort of into the initial balance, I will be happy with that as well. One of the reasons is that we are opening inside the value area from yesterday, and it looks like NYMEX is also going to open inside value if we stay anywhere near these levels. We're heading into July, so this is end of June now. Typically, you start to see the dry up of liquidity as we head into kind of the middle of the summertime. So because of that, I don't want to be looking for like super massive targets. And anytime you have markets imbalance, it's all very well to want to use 2R multiples, but that's not always possible. So you basically start to change to try and get base hits, right? So it becomes a game of, hey, I caught some money, see money, take money, right? That is one of the only times where I will say I am totally okay doing that. So even if we rotate down to this developing value low, which is an orange color line, that would be a pretty decent trade. Or they could just keep chopping here. I've been disliking trading during the New York session a lot. I find that it's still incredibly choppy, tricky, annoying. Somebody says something. It's almost like they're waiting for somebody to say something, and then the algorithm's going to do their thing, and then everything goes dead again. So it's like, is that what we're doing? But Asia doesn't seem to care. Asia has been giving super smooth movements. It's only sort of once everybody's awake and they start talking, that's when trouble ensues. Now, let's have a look at what crude oil has done on some large time frames, just for a bit of context. So on the weekly time frame, last week we fell pretty significantly. We don't have a new lower low, and for now we are holding that 70 level, which is a gamma wall, and it has been the gamma wall for quite a while. So there is a small chance that we found a bottom, and then maybe at some point this is going to turn around and scream into another uptrend. But I do kind of think we would need a catalyst for that. So we'll see. This is not supposed to be some big swing trade at all. This is just banking on the fact that we've extended the initial balance pretty significantly. And statistically, this is why this bot exists as well. Statistically, what you see is that by the time you rotate, by the time the NYMEX opens, you're already back into the London initial balance. So that's the whole idea. It's, again, a statistically viable setup. When it doesn't appear every day, obviously, because the first condition is that you have to have a pretty decent extension of the initial balance past one time the size. So today we have initial balance size of 33 ticks, and the extension is probably about like 50-60 ticks here. So, it's very decent. So condition number 1 is satisfied. But, how far it's going to rotate, that's a matter of context. So we do have some summertime here. But yeah, we'll see. It gets a little jumpy around about this time of the day, because everybody's kind of starting to wake up. And what I will do, because I'm not too keen on running double positions there. Let me just clip some. Oops. There we go. Alright, so we are in with one. But it's nice to see that me and bot do agree. That's a good sign. Alright, let's see what's happening in chat. So we have Ivan, good morning. We have 7 Hebrew, 11 Shark. We have Rob. We have Keith. We have Clean This. Am I reading that right? Yeah. Tempered Trader, Vartang, Vital, KJ, Puneet, Leia. I had the pleasure of meeting Leia at the Expo. We hung out. She's a cool lady. Initial balance trader. It was quite a weekend. So I went to London, obviously, to be a part of the Expo. You've probably seen some photos. The day was super sweaty. I don't know whether the building doesn't have AC or it just broke down. I don't know what was going on, but it was a little bit disorganized. I'm gonna say that. They had like well over 2,500 people, but they tried to jam everybody onto the single floor that at best holds like 1,000 people. So from that perspective, I can imagine that it wasn't very comfortable for people who had to queue up for so long. But yeah, it's just the first one, you know. Apparently Comic-Con was the same for the first time because everybody thought it's just going to be like a whole bunch of weird gamer kids that had turned up. And then, you know, a whole bunch of people turned up and it became one of the biggest events ever. So let's hope that, you know, we're heading the same way. The good thing is that we are definitely sure that the prop industry is pretty popular over in this part of the world. And it gave everybody opportunity to meet face to face, to, you know, meet some familiar names and match the face to the name. So that was pretty cool. And yeah, it was a great day in the end, very tiring. My voice was shot for about 2 days, so it's just kind of coming back today. But yeah, it was an awesome day to see everybody and to just, you know, put everything in an actual kind of real life situation, because, you know, everybody knows each other from streaming and whatever, but, you know, once you actually meet people, it's a little bit different, and it's always very exciting. Okay, so am I running anything else? So I'm just gonna double check here. So that's just short, that's short. Right, okay. I think we're just running one bot. Just to make sure that nothing else kicks off, I am going to switch off a few things here. Because it gets a little bit difficult to figure out what's going on. Now this is the one where I had doubled up, but let's go to the one that had the original entry, which is this one. Alright. Who else is in chat? Ava is here as well. Trading Nickels. Short Story Vibes. Sylvia. Am I reading that right? Sylvia? Yeah. What is the time of my initial balance? It's not my initial balance. Initial balance depends on the session that is currently active. So the first one is London, right? So London doesn't really change the times. It's only one. So that's between 8 a.m. and 9 a.m. my time. If you are working off of Eastern time zone, that would be -5. So just use a time zone converter. However, with NYMEX is going to be opening up in exactly, can't see squat in these glasses, in about an hour 50 minutes, okay? So that will be the NYMEX session. That is when the energies start trading. Now the metals open up a little bit before that. So they actually open at 8:20 Eastern. But I consider 8:30 Eastern to be the COMEX open because very few platforms will allow you to run profiles that start on like weird times, weird minutes. Even though you could use a 20-minute time frame, I just feel that it's like going a little bit overboard. So what I do, I've always done just COMEX open on the bottom of the hour and just be done with it. So all of my research and, you know, backtest research, everything that I've done, it is using that bottom of the hour for COMEX beginning. But yeah, so and then you get NYMEX open, and then that's an hour, and after that the shackles are off, the IB is set, you can start looking at how the day is going to behave. Right, let's put down some hypotheses. I'm going to probably just drag out a very high-tech document here. If I can find it. Just give me a minute. A very, very high-tech document that my market stalkers will be very familiar with. So high-tech. Alright, so we are creating hypos for crude oil. So what I saw on the weekly and daily chart, this should actually say weekly, daily chart, potential consolidation, demand, question mark, because it's not, you know, it's not sure yet. Value open was inside. That immediately means more sort of responsive activity potential. Initial balance range for London is actually pretty small. So we're gonna say normal range, but on the smaller side. Now, is the average daily range exceeded? I need to have a look at that without these shades. Usually I have white charts, so this is not a problem. No, so we have intact average ranges, and same thing with average session ranges as well. Now, what is the C-vol doing on crude oil? So for those of you who have never seen me do this, this is something that I used to do every single day when I was running daily streams back in like 2021, 2022. And basically it's my prep of how I approach the day. Now, obviously after 20 years of doing this stuff, I don't need to do this every single day, but this is the process that I personally have always used to figure out exactly what's going on. So the volatility index for crude oil is the C-vol from CME. Now you can actually find it in TradingView under the symbol OVX. Okay, so we can have a look at that instead of going to the CME website. Now, not all of them will be available, so I think the gold one is, and in crude oil you can find very easily, but you know, some of the weirder ones, like for example, you know, copper, you do have to go to CME. So where are we at? That's still elevated. That's still 45, right? And on my little thing here, it says I need 35. So we're 45, therefore all good on the volatility. So what does that tell me? It tells me that when the market moves, it's going to have enough momentum and juice and volatility to actually do something, right? So these are related to some of the other products. So what do we expect on a neutral day type? So with the way this is looking, like we have the auction fade currently into pre-market NYMEX. So that's the setup that we're running here. What would be the target? Well, aggressive target is that 70 level. And then median target, let's say developing value low, okay? So this would be target 1, this is target 2. If I was in with more than one, and this is a full crude oil contract, I don't want to do that, especially because I'm already, you know, in with probably about, let's see. Yeah, so this is already 4 micros across 4 accounts. So that's already quite some size. So maybe we can take off some of the other accounts, but then leave others and, you know, maybe manage it that way. It's kind of similar, the way I'm looking at it, it's like having one single position, and then you're using different accounts to effectively scale in and out. So I don't know whether anyone's ever thought of that, but that's kind of how I look at it. If I am, you know, tripling or quadrupling across a number of accounts, but I will almost never run copy trading or all the bots at the same time on all of the accounts, because that's not very clever. Because one thing goes wrong for whatever reason, and you have no accounts, so it's not a very good thing. All right, so the second choice will be also in the vein of this idea of a retest of 70, so it will be a neutral day type at that point. So maybe some kind of a bounce from Asia low, maybe even retest the brand new, because this was a Tokyo low, so obviously Shanghai went a little bit lower and then they bounced. So maybe, just maybe, we go all the way down. And then maybe decide to rotate, and that would be a neutral day responsive fade type setup. And that could come sometime during NYMEX, but then NYMEX may change the profile, like literally. I'm not joking. So if NYMEX then extends the market to one side, that opens up a possibility for maybe a value rejection and a continuation downwards through the 70 level. We do have a negative gamma situation here. So, so any kind of movement in either direction is expected to be amplified quite a bit by the dealer activity. So what could be the third choice? The third choice could be a long, because on the daily chart, we have that demand being created, right? So that could take, they could step onto the market at any point, and in that case we could see a sustained auction higher into a new move away from ballpark 70 gamma ball. At the moment I don't have a fourth hypo, so we're just gonna leave it at 3. So that's how you create an intraday plan. Mic drop. So basically it's always the same thing. The whole point is not for me to go, oh, look at me, I'm so clever, right? The whole point is just to show you that whatever you see me do, there's always like a method to the madness, right? And that is one document that I'm always using, even though it doesn't necessarily for me at this point have to be on a piece of paper, right? Or on the screen. But it's up here. So whenever I'm looking at the conditions that the market has, I will effectively flip them depending on where my levels of interest are. But at the end of the day, it's always the same thing. It's always going to be, you know, one of 3 setups, 3 playbooks. It's always going to be what has the daily chart done. Do we have a demand level? are we doing anything interesting on those large time frames? If not, you go down to zoom into the market profile and the average ranges, and then obviously the dealer activity as well, and then try and smush all of that together and create 3 or 4 hypotheses for both sides of the story from like ideally different levels, right? If it's a range bound day, that kind of limits the choices, but you can always run rotation trades, which is what we're trying to do here. So hopefully it's a little bit clearer what it is that the market stalkers method is all about and how it all behaves in real time when it comes to hypothesis creation. Oh yeah, Comted, I don't know how to read your name, mate. I'm so sorry. But yes, I remember you coming over. Very good to meet you as well. It was so amazing to meet some of you. It's so cool, you know, we run these streams, you know, from our homes, and we're just like here sitting, chatting, yapping, talking shit all day, right? And then you actually get out there like in the real world and we get to meet, and it all literally becomes like so real, and it's so super cool. I am truly so grateful that I was able to be a part of this Prop Expo. Now, as you guys know, I did mention that I was there courtesy of Apex team. So again, I want to say thank you to Apex. I know that they get a lot of stick and stuff, but they, you know, look, no prop firm is perfect, right? And at the end of the day, everybody's just trying to, you know, have a viable business model and protect themselves whilst also remaining viable, right? As a business. So it's tough times at the moment, right? We're going through some very interesting changes in the prop industry, but how cool that we had, you know, a whole expo for ourselves. Could it have been better organized? Yeah, I mean 100%. My makeup was like melted off like 2 hours after I got there. It was ridiculous, and I was so dehydrated. And you know, at my age, you kind of get a big effect, like you get dehydrated and your skin just kind of goes, and you start looking like a raisin very quickly. But yeah, so cool to meet quite a few of you, and obviously I remember you came over to chat as I was just hanging around in the booth. So yeah, very, very cool to meet everybody. Oh, French for keeper of the candles. Sam is easier. Sam, that's right. Yeah, I was thinking, I was like, he wasn't French though. I'm pretty sure he gave me an English name. Sam, that's right. And I also met another guy called Mo. He was actually so sweet when I was outside waiting for David from Apex to come and get me, and he was like, you know, there was so many people you couldn't actually get to the lobby, and I was there, you know, around midday. I didn't want to rush, and you know, it just kind of took it a bit leisurely because I didn't realize how many people are going to turn up. So I was there, and as I'm waiting, a very nice guy called Mo comes over and he goes, surely someone like you shouldn't need to queue up. Like, are you queuing with the rest of us? So I was like, oh, I'm actually waiting. So we had a great chat. He has his own Instagram page. He's called Cypher. So yeah, check him out. Great trader. Again, so many of you are so competent, and how cool that we have our own expo. So that was the first one. Many more to come, hopefully, with air conditioning. Preferably. Alright, let's have a look. London starts trading metals in 1 a.m. local time through LME Select. No, so LME Select is not a thing. So the LME Select only trades copper and aluminium, tin. They used to trade precious metals, but they no longer do so from, I think it was 2022 when that changed. So they used to trade the precious metals in the chunk of the LME exchange. So for those of you who don't know, metals in London are usually traded on the London Metal Exchange, and it's the weird exchange where, you know, you're kind of if you're picturing the kind of Chicago style shoving, pushing, you know, 300 people in the pit and like chaos everywhere. The LME pit is very, very English, right? So everybody sits in a circle, and there's no standing up unless you're like a broker who is getting the orders from the actual traders. But the traders themselves, as they're trading, they have to sit in a circle. I'm going to see if I can drag out a photo of what that looks like. And the LME exchange has, that area is called the ring. Now, why is it called the ring? Again, it's the weirdest exchange in the world. Every 5 minutes, there's a ring, there's a bell that goes off, and then another metal is traded in 5-minute increments. So you trade 5 minutes of nickel, then they trade 5 minutes of aluminium, then they trade 5 minutes of copper. And then that kind of carries on until you get to something called the curb session. And it's the final 10 minutes of the morning and afternoon session when all of the industrial and base metals are traded. However, in that curb session, they used to trade everything, including precious metals. That changed in 2022. They do have, so what is LME Select? It's their electronic system. But it still doesn't trade precious metals. Okay, so the LME timings and all of that is only relevant for the base metals. The only base metal that the only industrial metal that we can trade with prop firms is copper. So if you're gonna reference, and in fact I have again another blog post on my my website that is very copper specific, and it mentions all of that. So let me grab that for the for chat, because that's not, I don't have that as an automation. Did somebody yap? You see that? That is newsy, but you know, we'll just commit to the trade, because I'm just so sick and tired of tracking whatever Trump has said next. Because, you know, it's been going on for so long now that it's like, just stop, you know? Who else is tired of the headline risk? All right, so here is the profile posts for copper. So it mentions LME, it mentions a whole bunch of stuff, and it should be quite interesting. I need to see what this is, because, you know, if they are kind of smashing each other to bits, then I'm gonna have to close it. Dialogue with mediator Qatar on implementation of interim deal with the US, including release of frozen assets, is likely to be on Wednesday in Doha. I've been to Doha. It's a beautiful place. We had a head candy New Year's that we were hosting one year. I mean, that is kind of bearish for crude oil, but you know, the algorithms and all that, but let's see. We shall see. Yeah, the war starts and stops every few minutes. I'm 100% with you, Pacamp. Absolutely. Tempered Traders has a question. Tempered Trader, in fact. D, when you trade the Asian session, do you draw your Asian session TPOs from Tokyo Open to London Open? So Asian session to me has a bit of a twist. So having watched it for probably about 7 years now, I couldn't really see that the initial balance or any sort of TPO for the current day profile has any sort of an edge. So it's definitely a bit of an odd session. However, I have a twist on that. So I use the pre-Tokyo range as sort of an initial balance, right? So instead of the actual Tokyo Open, I want to see where Tokyo trades in relation to that pre-market Globex Open. That tends to be sometimes quiet, but sometimes it actually has a pretty decent range, and that also gives us information. So for example, if it's super quiet, I would be looking for maybe a breakout out of that. If it's fairly wide, I might be looking for the exhaustion events at the edges. And sometimes if there's absolutely no reversals from the start of Globex through the first Tokyo hour, the initial balance, you might be in a situation where it is one of those rarer trending Asia moves that just doesn't stop. But that's kind of how I look at it. It's pre-Tokyo range over the initial balance or any kind of TPO. The only thing that does work is the previous day's Asia value, so previous day's Tokyo value specific, only Tokyo hours. If you have an extended move that basically closes the gap to that value area, you can have like a bounce in the opposite direction again. So that's kind of the only viable sort of, maybe I should do a post on trading profile or not trading profile for the Asia session. But yeah, I very rarely, you know, kind of do stuff based on the actual TPO, because most of the time Tokyo is going to be a neutral day type, and it's like, it's crazy with how much frequency they actually appear. Nearly every, I would say about 60 to 70% of Asia will be pretty much neutral days all over the place. So that makes it very difficult to, you know, find any sort of an edge unless you're going to look for smaller trades. But when you put the pre-Tokyo range, suddenly you see these like breakouts and stuff. That's what my bots are based on. Scanning the pre-Tokyo range and then some volume conditions and stuff. Alright, so Delta is kind of reading this piece of news as kind of a bit of a bullish sign. Doesn't make much sense, but nothing does in this war. So we'll see. Have I traded the London Open? No, so I traded the Shanghai Close. I prefer that. So what I did, let me grab copper. I think I did one London thing, but let me go to data series, and then there was one tiny bot trade that didn't do anything, and that was overnight, so that wasn't me. But this was my trade, so this was, yeah, I suppose this is London, so it was extension of the initial balance down, but it's basically kind of the same setup that I do all the time. You're looking for sort of the copper to exhaust the original move from Asia, and then you're looking for a return to VWAP, and then that's pretty much it. So that was my little manual trade. And then these, was this yesterday? No, this was overnight. So yeah, a couple of trades there. I don't know what they were doing there. Right, so that one was kind of a long, and this one was a short. But they, like, neither of them had too much traction overnight. So yeah, Asia has become my favorite session by far for the duration of this war. It's not always going to stay that way, but for now, I'm just finding it so much more smoother. And you know, I'm a lazy trader, so I really want to just not have the drama. Some people love thrive in like, oh my god, the news. I avoid news like the plague if I don't have to be in it. Where can I learn volume profile? Well, I teach more TPO profile. I mentioned volume profile, but I feel like volume profile is pretty simple, right? So here's volume profile. This is the overall volume profile. What do you need to know? High volume node, low volume node. Low volume node is where a lot of volume is, so it could bring slower price action, could also behave as a stopping point, or at least a speed bump of some sort. Think of it as like supply and demand, only through volume profile. And then just like TPO profile, you can have the previous day's value high, value low, which could give you an idea of whether you're opening with a gap or without a gap. So if it's with a gap, what do you expect? Gap close. If it's no gap, it's imbalance, so more range bound. That's it. That's your volume profile. But TPO profile has a lot of little subsets, and that's why it's so powerful, but it's also trickier to grasp, right? It takes longer because it's got many little playbooks, and then I went further and I expanded the playbooks. Why? Because I trade commodities, and the profile was originally created on ES and equities primarily, right? So obviously when I started applying it to commodities, there was literally nobody else. This was a very long time ago. It was 2013, 2014. There was nobody talking about it. So I'm like, well, clearly the 3I days don't work the same way on crude oil. So I started writing all of this down, and then after about 5 years, I had so many notes, and I came up with twists on the setups. Like, for example, auction fade is my setup. You won't find it anywhere in Dalton. Why? Because it's primarily specific to gold, crude oil, and copper. And what is it? It's when the initial balance extends, but it moves just slightly too far out, not massively. You're not yet in a trending day, but we've moved out of the initial balance, let's say by about 1.2, 1.3 times the size of the IB. That's when you get the fade. And actually that's exactly the trade that I'm in on here, right? The timing has to be right. So for example, if this makes no traction into the first sort of half an hour of NYMEX, that will be cut off, right? So wherever it is, I have a time stop. But if we do try to rotate, the natural target for this particular trade would be somewhere back inside the London IB. So that's the setup. So London extends, and then NYMEX brings it back down. And that's kind of conducive to the intra-session chase. They chase each other, right? So these guys go long, then London steps in and goes, no you don't, and then they go short. Then NYMEX goes, oh look, cheap crude oil, yeah, let's plow in, so they buy. And that kind of happens more days than not. So once you start looking at it from that kind of zoomed in intercession behavior, you start to understand that there's structure to it. And then you attach something like dealer positioning, which gives you very clear levels of where the dealers will engage. That's what my Blahtech GL does. And it only filters for the biggest ones, right? So we have this weak level here at 71. Sure, it was a reaction. Now, if we get back up there, it's probably not going to be strong enough to stop yet another rise. But we're still battling around the Asia high. So at the moment, this is still the same setup of the crude oil fade. But it's not like, this setup is not like, oh yeah, it's like 90% every time it turns up. It probably has about 65% accuracy, right? 64, depends on the time of the year. And it's very context related. So right now we do have a short trend in general in crude oil on large time frames. So shorts until proven otherwise, to me, is kind of how I look at things. And that does mean that sometimes when it turns around on a large time frame, these sorts of trades won't work, but they give me information. They say, okay, well, the IB fade, which is what this setup is, should have worked, but it didn't. Why? ah, we have a trend change. So then that goes into your plan for the next day. And then you take that information and you trade with it the following day. Right? So to me, like every time I lose a trade, it's not like, oh, I lost the trade. I don't like sit there and, you know, be like horribly depressed over it. It's just information. It's nothing else. It's information. A bit of expense, you know, you bribe the market. You gotta like, you know, wanting to find out like a detective what's happening. And you go, hey, can you like give me the scoop? Like what's going on here? So you pay a little bit of money to obtain some information. So maybe if you start looking at your losses that are controlled, because all my losses are controlled, maybe, you know, losses won't hurt as much. Now I know that I run like 8 accounts here. So when you see the big numbers, some people like really freak out. But, you know, do consider that my good days, which is most of them, are anywhere from 8 to about 16K. So this is like, to me, kind of very middle of the ground meh day, right? It hasn't even started. And to me, this is probably going to continue into the summer. So I'm expecting like sort of 5 to 7K across the 8 accounts, right? But when I smash it, when it's a really good day, we are looking at, you know, let's say 12 to 16K. But then you lose, and that can be anywhere from 8 to 11K. How many of you can say that you'd be comfortable losing 11K in one day? Whereas I'm like, yeah, whatever, it's just one day. It's cool. And again, because I can string a number of days that are profitable. So that matters as well. I don't know whether you think about it. But if you can't string together, like let's say 3, 4, 5 winning days on a streak, and you're always one day up, one day down, one day up, one day down, your risk should be a lot less than somebody who can string together 10 days in a row, or even 3 days in a row, even 5 days. It's all a part of the risk model. But NYMEX trades 24 hours a day, 5 days a week. No, it doesn't. NYMEX only trades from my 2 p.m. till 7:30 p.m. Those are the official NYMEX hours. Futures trade 23 hours, 5 days a week, but that's not NYMEX. Vital? That's not NYMEX hours. That's just the futures, okay? And most of that will be considered the overnight session. The RTH, regular trading hours, okay, for NYMEX, are from 9 a.m. Eastern until 2:30 p.m., okay? And yes, the institutions still follow the same, exactly the same rules of the exchanges that they used to have as the open outcry. Same thing. They sit down and they trade for the RTH hours, regardless of them sitting in the office and not actually going into the pit to shout and shove and so what I'm going to do here, this is another thing that helps me just figure out how the trade is doing. So I have this little free tool called multiple risk reward. And I am going to change the text here because I can't see. Now, usually I have white charts, so this is why I am not seeing the target, but that's not going to be here. Where is that? Is it in properties maybe? Let's have a look. No, maybe it's in data series. Price marker? Nope. It's not there either. Chart background. crosshair, interactive data series. So where would that be? So I'm looking for like a for like either text or drawings or something that I haven't changed to black. But it looks like I changed everything, so I don't understand why it's not showing up. So maybe on the indicator itself, I don't know. But yeah, so what is supposed to happen is the same thing that I used to use on the other platform. The colors here. No, that's just the anchor. So there are no colors. Right, so maybe I can change to white here for a second, just to show you. There we go. I don't know why the colors are not changing, but you basically just put this line marker here. And then it kind of gives you an idea of how deep your trade is kind of drawing down, what your risk is on a one lot and all of that good stuff. But more importantly, it kind of pushes you away from this very kind of in-your-face marker. And if you turn it off and you just have these lines, to me, that's been like always something that I used to do, where instead of freaking out, you're just looking at how the actual real-time price is behaving in relation to this trade marker. And for some reason, I can maintain emotional calmness much, much better. I don't know why. And it doesn't matter what size I'm in. It's always just like, nah, whatever. And it's like, you know, super calm. And it's called, it's free. It's called multiple risk reward. I don't know who made it. I literally just found it through like a Google search for multiple risk reward NinjaTrader, and that thing came out. So it shows up in the drawing tools. It's not an indicator, it's actually a drawing tool. And yeah, so if you're struggling with maintaining composure and holding trades longer, maybe consider using this. Right, so we're back at 71 area of the week call wall. So this is kind of a decision point. We'll see what happens there. I'm not somebody who messes with my trades or stops, so I just let them do whatever. Because if you're taking trades off early, you should be taking off your stops early as well, in theory. But if you're getting a full stop out and then taking trades off early, that math is never going to work. So this is something that I know about myself, what generally the market does, and the amount of times that I pull off a trade that kind of goes into a drawdown and then it goes to my target is staggering, a staggering number, and then I've got nothing, right? So at this point in my career, I'm actually more happy to have like a stop out, because it tells me, again, a piece of information, than to kind of go, oh, I'm going to pull it off early because, you know, I'm going to save some cash. I'm just defining the stop above the previous high. And if that gets invalidated, then this gets invalidated completely as a trade idea. That's absolutely fine. And remember, this is also a bot trade, so I shouldn't be messing around too much with it, because I'm trying to see how they all perform over time. And since it only has 65% accuracy, obviously some of them won't work. And again, we have to be okay with that. Performance over time is what you're looking for. You're not looking for any individual trade to work out. Now, this 71 level here is causing a bit of trouble. So let's have a look at Bookmap. So we've arrived at 71 area. So what are they doing? There's some sellers here. I'm not seeing any particularly big numbers yet, but this is an interesting level for the institutions. Why? Because it is a call wall with high implied volatility. And therefore, we need to wait and see what they want to do with this. Suddenly, Delta completely jumped off and shaved off. It was positive, and then we hit 71. Now we're trying to go into negative Delta. So the question here, will it be sustained? But there is institutional interest here. I'm going to switch on NinjaTrader again. Adjust this marker here. There we go. Joe, this is NinjaTrader. We have 2 indicators that will be out very soon. So they've been approved by the QAs. The others are still undergoing their testing or whatever the hell they're doing with it. But yeah, so I'll be getting in touch with some beta testers. And please don't beg me to be a beta tester, because I am looking for people who are more technical. And we already have about 5 or 6 people in mind. So I'm not looking for people who are just like after a cheap deal and then they don't report the bugs, right? If we're bringing out Blahtech indicators, we want 5 or 6 people who are the beta testers to go, hey, this is a bit weird, or this happened. You know, we want them to actually report the bugs. And what I've had in the past is that we've had like 20 people who all signed up to be beta testers, and then crickets, tumbleweed, nothing, just like complete silence. It's like, and then I was the one finding bugs. So I'm like, you know. But yeah, 2 of them should be out probably somewhere after 4th of July. So obviously everybody's going to be away. This is a short week anyway. So yeah, we're going to be looking to release them probably, let me look at some dates. Yeah, the week of the 6th, let's say. Yeah. Because obviously I don't do 4th of July because I'm not American. What is the tool that I'm using with all the balls on the chart? Well, the balls, indeed. It's Bookmap. And Bookmap are actually going to be running a pretty good deal as well for the 4th of July. It actually starts on 3rd of July. But I did manage to get an affiliate deal with them, with Bookmap. So they run 50%, but my affiliates are going to be getting 60%. So there will be a YouTube post with like the code and everything when that deal goes live. Right, what's the time? I mean, it's still pretty early. Yes, it's Bookmap. Do I even have Bookmap in the descriptions? I'm not sure. I know I have it on like one video where I actually specifically talked about Bookmap. I don't know. But yeah, some very, very nice deals are coming for 4th of July. Again, they tried to go higher and now they're just like hanging. They are hanging. Is there anything else going on? We have a potential for copper going higher, but I don't really like trading copper for this time of day. My next copper setup will be in about 90 minutes time. And what I do there is I look for the extension of the initial balance, and then I look for the signs of a fade. If it ends up with like a pin bar on a 30-minute chart, they will try and swipe the pin bar first. Again, that's very different from equities, where pin bars are usually very good reversals and then it just goes. Well, on commodities, it's not quite like that. So they kind of create a pin bar, then they swipe it just to make everybody as miserable as possible, and then the reversal starts. It's like, thank you. But you know, you can get ahead of that. Are the white charts a huge eyesore? Because I'm finding them very pleasant to my eyes. But if you're thinking that I'm like psychopath or something, I'll change it back to black. Yeah, Mr. G, we know what 4th of July and Independence Day is. And as Britain over here, we don't celebrate it because you guys liberated from us, right? And it's so funny every time I'm talking to Americans, they're like, do you guys celebrate like 4th of July? And I was like, yeah, because like 4th of July is a big British holiday. Like, come on. And I'm not even, you know, natively British. I'm Serbian. I'm just a naturalized British citizen. So there it is. Right, let's swipe of the high there. The panels. Right, so gold looks like it wants to go into a value acceptance, but it's just so slow. Just try to see if there's anything else on the market. What's DAX doing? DAX pushed into a multi-single print day. So that's a no. Let's have a look at maybe natural gas, what it's doing. Not much. I mean, it went up. No good levels there. Let's go back to copper on this chart. Yeah, NG is moving later. Around about this time of the year, you have the AC like smashing, so the natural gas demand goes up. But I have been finding it that it sort of happens in like spurts, where it's like nothing, jump. And then if you're not already in, you know, I'm looking at it after the fact, it becomes a little bit difficult to catch. Copper might be turning around. Again, copper at this time of the day, it's a little bit sketchy on the stats though. Look at tape on DAX, because that might be far enough to warrant some kind of a reversal. While I wait for this crude oil to do something. Load. See, they changed this usually before, like you right click and then you can just get like all the data to load for like 3-4 hours, and they kind of don't. I don't see that. Oh, here we go. Okay, you click on the arrow. See if that'll work. Do you know what? Let's try this DAX fade. I know it's an equity index. I know you're not supposed to be shorting it, but it kind of came up far enough to warrant a little bit of a sell-off. Let's just do the tradefies because they're pretty stress-free. And let's do this one. This one is a bigger one, bigger boy. Because also I'm seeing like a negative correlation now, stepping in between crude oil and equities. Again, that could be a bit of risk on sentiment. So since we're not doing gold, let's replace these two. Oh, that's a nice photo. And then maybe if this gets a bit of traction, maybe we can add before it runs away too much. So now one problem area here is the single print. So if we can tag the single prints, that would open up the possibility for a bigger move. We do have the exhaustion, almost an exhaustion of the average session range for London. That's this yellow line. Not quite, but again, summertime, so there's going to be a bit of range contraction. And I mean, they really went up all the way. Could they keep going higher? Sure. Is the pre-market the time for a bit of a sell-off? Yes. So, again. DAX, they do like to rotate a little bit, at least down to the VWAP around about this summer day. So, see if we can find something. And there are a few sellers here. Again, this is not loading. I need more bubbles. I'm trying to load more data. Again, this used to work. I don't know whether... So when you do this, it's supposed to load like the tape from like 3 hours ago. But it's not doing it for some reason. All right, we have institutions stepping in DAX. Somebody's getting rid of some positions. See that? So let's add one. Not on all of them, just on a couple. There we go. So the dots are basically a combination of a large lot indicator and the sweep as well. So sweeps can happen up and down. They're not just like single direction. And today we have a decently strong gamma wall at 25,000. So that could be a nice little target. Negative gamma. Where's the gamma flip? Far away. All the way up to 26,000, right? That's the monthly option gamma flip, right? But yeah. So again, if they do reverse it, negative gamma should amplify anything that the dealers are doing. So the upside was amplified. So we'll see whether the downside is going to be amplified as well or not. Good tape. Let's put this here. Okay. Donna is here. Hello, Donna. Good to see you. Andrea saying, looking astonishing as always. Thank you. I'm actually feeling still a little bit fragile from the expo because it was a massive big day, right? It was very difficult. But it was a beautiful day, but you know, I still have like consequences. So that I'm a little bit light sensitive, so I feel okay. I do feel okay, but it was it's gonna take me like a couple of days to get back to normal. So I'm on a Red Bull, you know, I've got my babe, I've got everything, I've got the shades on, and it's all kicking off. What's the time? Okay, so we're gonna have COMEX opening in about 10 minutes generally. So maybe something's gonna move. There's crude oil. It's just like hanging there. It's like literally not taking me out. It's just like we took out the London high, which is not really the London high because they've just made a new one. And it's just hanging. Like, come on, make a decision. Now, interesting thing on Friday. We had a positive correlation between gold and crude. So I haven't seen that in like 6 months since this war began. And I think the closer the deal is, we're gonna see some of those traditional, what do you call them? The traditional correlations between the asset classes coming back. But you know, it's all been a little bit weird with like gold and equities correlating, and then crude oil and gold going negative. It's like, since when does that happen? I mean, I understand why it happened, but it was just like slightly odd conditions, let's put it that way. Because usually when you have risk on, risk off, that means the risk products like gold and crude oil and stuff, they will be going up, and then equities go down, and vice versa. But to see gold and equities go the same way, so what does that tell you? It tells you that gold is maybe not a safe haven anymore, and that cash is. I suppose that's how you can read that. I don't know. Maybe I'm reading too much into it. Right, I mean, this negative delta is still there, so they haven't really made a decision. The bid-ask spread is trying to go underneath the real-time price. That can sometimes lead to tell you that some some sell-off is on the cards, like imminently. And you can't see that across everything. It has to be, like, you won't be able to see it in gold. You won't be able to see it in, like, something like NQ because the spreads are really tight. But DAX, copper, like anything that has a bit of a wider spread, it becomes a lot more obvious when you're kind of trying to figure out if you can kind of jump ahead of like an auction fade, which is what this is as well, another auction fade attempt. Yeah, so gold is just stuck in a range now. It is going down, but this is now a range. Where's NYMEX? No, where's COMEX? Yeah, inside value from yesterday. Right, so somebody tried to buy there. They got gobbled up. Still no decision though. Slightly negative delta. Slightly negative delta. Now, these single prints here are the danger zone. So if we can quickly drop through them, that would be effectively a single print fade. And that would open up a bigger target towards VWAP. Rafa says, hi Dee, I was the Expo on Saturday. So it was a bit sweaty. I met Leia. Leia's in chat. Met a whole bunch of people. So it was good for networking. The organization itself was a little bit messy. And the Expo was supposed to run on 2 floors, and for some reason they only gave us 1 floor, and then they tried to jam about 2,500 people into the space that maximum holds like 1,000, and the air conditioning was either non-existent because it's an old building, or it was broken. I don't know which one. Because, you know, with London, you never know. Sometimes you have these like very old buildings that just don't even have AC systems. And this wasn't the biggest conference center. In fact, I've never been there. I've only been to the bigger ones like the Excel, Olympia, the O2, you know, and this was like a relatively small building for what, you know, conferences usually are. And it was not too far from Victoria. So I didn't even know there was a conference center there. But yeah, so from that perspective, it was very sweaty. I hear that people had to like queue up for 2 to 3 hours. Some people couldn't even get in, so they got refunds and stuff. So basically, they oversold the venue. But hey, better to oversell than undersell, right? Some people were expecting that the seats are going to be empty and stuff. It was packed, like people everywhere. So it was super sweaty. I melted. But hey, had a really good time because I got to meet a whole bunch of people, finally face to face. I hung out with Austin Silver a little bit, so he was there. Kyle, Damn Good Trading, I don't know whether you remember him. So we know each other from Top Step from 3 years ago. Obviously all the Apex crowd, they invited me. Trade Day guys, I also met Brett Simba face to face, so we had a chance to chat in the backstage. So yeah, it was a beautiful day. So I went for drinks with James Thorpe from Trade Day. So we had a big chat. Oh yeah, a whole bunch of stuff coming to Trade Day. For those of you who wanted Rhythmic connections and stuff, Trade Day are bringing Rhythmic connection on. Like the soft launch is about 6th of July. Okay, so oh, and actually, we have a new code. It's kind of an old code, but I don't know if people know that. So I know it's horrible, sleazy, and everything, but here it is. So there are 4 companies with code Grasshoppers. One of them is the journaling platform that I use, which is Edgewonk. Then you have Trade Day, Tradeify, and Apex. So with all of them, you can use Grasshoppers. So you won't forget that one, right? And you get either some discount in case of edge wonk, because they're a bit stingy on discounts, or you get a very very good chunk. Depends on where you go. But yeah, I'm not gonna keep this up for too long because it's I don't like the scrolling things throughout the entirety of the stream, but sometimes they have their place. All right, finally commitment. And crude oil went up. That's all right. Let's see how far this DAX trade has to go. Tagging those single prints. They are fighting. All right, that's enough of the scroller. Come on. How many ticks is that? Ooh, whole 19 ticks, yeah. Like, careful, don't go too far, Dax. All right, so come on, close out single prints. Then we have a chance to pick up like some more momentum from running through the low volume area. And then maybe we get a full fade down to VWAP. We'll see. Carlos says there was a strong support zone in crude oil. Not on the daily yet, okay? I showed the daily chart earlier, and I'm just going by the statistical events that usually happen 64% of the time in and around this time. So I couldn't care less whether there was a support zone, and in fact this was both my decision, but also the bot went into a trade as well. So when it comes to bots, you can't go too wide with the conditions. You have to kind of take the best case scenario where you will both be in enough trades, but you will probably have a trade-off with not having the most perfect setup each time, right? So as long as if it's statistically viable, I'm actually perfectly happy to take that. I'm probably a lot less pedantic at this point than some newer traders because, you know, I'm coming from 20 years of doing this, and I can tell you that accuracy and losing your brain over how accurate your entries are going to be over the long period of time and thousands of trades that you're going to do, especially when you start trading with more size, it makes like fuck all difference. Like, I'm sorry to say that, but you know, the more you're nitpicking, especially the way I trade, looking for bigger targets, I just couldn't care less where the entry is going to be. And that comes from the fact that when I traded with a lot of size, when I was trading for an institution, you're trying to fill like 120 lots in crude oil. That's going to take you in the live markets probably about anywhere from 20 minutes up to an hour, because you can't fill the whole position in one click, right? So you have to dick around with like 5 lots, then 3, then 5, then maybe another 7 if you get like maybe a thicker sort of liquidity area. And that just kind of keeps going and keeps going. So over time, that had an effect on me where I realized that as long as the zone is ballpark there, the trade is either going to work or it won't. There's no third option, okay? So nitpicking over entries and stuff, once you've come from that sort of an outlook, it's completely pointless. So to me, what matters is the risk control, how much am I risking per trade, how many ticks, is that within the volatility of the regime of the product, and what's the time of day. Those are the only 2 things that I'm concerned about. How much it draws down, couldn't give a shit, right? And again, it's because I'm not a scalper either, right? So I'm somebody who looks for ideally about 30% of the average daily range as a target. Maybe less if we're in a range bound situation, But even then, I will want to grab like 15-20%. And on a swing day, where we might have a possibility for a single direction day, I actually want to take 70 to 80% of the entire day's move. So when you put it, you know, in that sort of perspective, where some of my trades will go to 5 hours, most will go to 1.5 and 2 hour. I just couldn't really care that, you know, a few of them get smacked in the face. I really don't. And some people have a big problem with that. They're like, Dee, why did you get stomped out? And it's like, yeah, and in fact, getting stomped out is something you have to get used to. You know, losing the plot when you get stomped out, that's where the problem is. So it's like people almost get annoyed that I don't get annoyed. It's like, how does it affect you exactly? I don't get it. Oh, Les says, I hit DLL in Asia, but my London setup would have been nice. TP would have been Friday unmitigated Asia, I below at 71.45. Yeah, that's your Thursdays weeklies, yeah? There they are again. So maybe the idea is that on a Tuesday, so on a Tuesday you aim for Fridays, yeah? And then on Thursdays, you aim for Tuesdays. Do I remember that correctly? From what we talked about. So maybe the idea is that on the days when you're expecting bigger targets, you don't trade Asia. Again, you know, you backtest it, so see how it works. Right, so we have full single print fade here. Can we get through the second single print? So these guys are done. Can we get through these guys? So VWAP is all the way down there. I mean, it still looks short, doesn't it? How does gold and silver, how do gold and silver correlate? So there is a thing called gold to silver ratio. It is a well-known spread, and a lot of institutions at the correct times of the year when the spread actually makes sense, there is, you know, some sort of a difference between them, they will be running the gold-silver spread. And they do correlate, but they're not like twins, right? Because they're two different metals. So they will be, for example, very, very closely correlated when you have monetary policy releases, anything concerning, you know, the interest rates, especially coming from America. So then they will be very closely correlated. So, you know, the ratio, the spread between them is probably not going to be as tasty at that point. But if you have, for example, PMI numbers or something, because silver is used in a lot of manufacturing processes, and gold is to a degree, but not really, there will be a difference between them. So at that point, you may see the spread between them, so the correlation kind of going away from the positivity. So it becomes still positive, but less so, and that's when the spreaders step in to actually do their spread trades, right? So they do correlate, but not enough to call them twins or anything, which is why the spread between them exists in the first place. Does that make sense? Do we know what a spread is? Because, you know, I was shocked on Twitter that a lot of people have not. The PAX was posting something about, oh, you know, the money that people made in the pits, most of them were spreaders. And they're like, that means something different where I come from. Spreaders? What is that? And I'm like, really? Like, you trade futures, you don't know what a spread is? Seriously? And yes, with some companies, look, you can't do those kind of spreads. For example, if you try to do that with Apex, you will be flagged for hedging. But if you're, you know, in your own personal account, it's absolutely legal and normal to have a spread between two correlated things, but they're not super correlated, right? They're not 100%, so you can't do like NQ and MNQ. That's against the CME rules. But you can absolutely do, let's say, 1 ounce silver and, sorry, 1 ounce gold and 100-ounce silver. You can absolutely run a spread between them. Just make sure that you are correctly putting the position sizes, because obviously 1 ounce gold is going to be much, much smaller than 100-ounce silver. And you have to make sure that the ratio makes sense for the volatility of both, right? So you can't run the same positions. So you have to take in volatility and obviously position size between them to make sense. But yeah, so correlated, yes, but they're not twinsies. All right, slowly catching monkey. What's the time? Okay. DJ runs, I'm not really looking at Forex pairs. I haven't looked at any Forex pairs apart from like, what's the, you know, what's the rate today, since 2017. So I'm not your person for Forex futures at all. I started in Forex 20 years ago, but I haven't done it in like so long. I have no idea how. I can't tell you anything about it because I haven't traded in so long. Blair says, I would have lost my mind if I was one of those outside after flying in from Stockholm. Absolutely, yeah. I mean, to be honest, if I had to queue up, if I wasn't invited by Apex and if David didn't actually get me in, I would have left. And I drove like an hour, 45 minutes from Surrey to get to London because I hit traffic and there was like, you know, it wasn't that easy getting in. There was a closure. Somebody like, there was like an accident. Someone ran into the barrier on the A3. So there's police and stuff. So, you know, and if I got there and I only had like a ticket and I wasn't actually invited by one of the companies, I would have turned around and left, man. Like, wouldn't even bother. But yeah. So hopefully they made it right and hopefully they at least refunded people. Right, so it looks like we're still heading lower. Look at how nice and regular DAX tape is. You know, if I were to like drag out NQ or something, it's like so, or maybe GC. GC is a little bit bonkers sometimes. Actually, it's not too bad today. But yeah, GC is like up and down like the horse drawers. It's hilarious. Earring says, good morning, D. Is there usually a negative correlation between metals and the dollar index? Again, this will be case by case. Sometimes yes, other times no. But during normal times when you don't have the war and stuff, usually a strong dollar should lead to a weaker gold and vice versa. But again, for intraday purposes, that's not always like that. And anytime you look at any kind of correlations, they're usually talking about them from a longer term perspective. They're not talking about them from a perspective of, hey, what's going to happen in the next 2 hours, right? So I know people like Aaron, for example, Aaron Luce, he doesn't really look at the dollar index and he is primarily a gold trader. Obviously, he trades other things. He trades NQ, he trades even my copper, and, you know, he dips into other products, but his core market is gold. So when you ask him, hey, Aaron, do you follow the dollar index? He'll be like, not really, no. So it's not really necessary for the times, even the times that I hold my trades, the durations that I hold on to my trades, I still don't think is that relevant. But yeah, I just think it's a little bit overkill for what we do. If you were running like a position for like 3 months, then maybe we can talk about that. But this is all just super short term. You know, my 2-hour, 3-hour trade, that's like a blip. It means nothing, right? And it's not going to add too much. When I'm running like some of my options trades, they do last anywhere between 20 to 45 days, especially if it's like a short call or something like that, where, you know, I want to get the premium. Those I have to be a little bit more careful, right? I have to consider the overall state of the market. I have to make sure that it makes sense from a weekly time frame perspective. And, you know, there's like, I need to also make sure that if I'm running a long option, that there is enough volatility for it to do what it needs to do in the first 2 to 3 days, because I never keep options for very long, since you get time decay stepping in, and then it erodes your profits and stuff. That's not the case with short options, because the erosion of the longs actually works in your favor, so it kind of adds on to the position. All right, we're down at the second set of single prints. Can we close out the entire auction fade to the initial balance high? This is a very similar trade that I was looking at crude oil, right? So that's what usually crude oil does in and around this time of the day. Today it didn't, and that's okay, but that also gives me the information that the potential consolidation that we have on the daily chart might actually mean that we have found the bottom at 70, and then for the rest of this week and the next, maybe I'll look at longs on crude. I don't know. I hate being long crude, but if we found the temporary bottom, that's what I'm going to do, right? Now at this point, I'm going to clip one. So I'm short. I need to get out my one, and this one as well. And I think we're in, oh no, clip that one already. And that one, is that just 3? I think I'm only in with 3. Let me double check. Yeah, so I was only in with 3 accounts. Clippity clip. Larry also says one could also use the weekly range, Tuesday New York IB range, to identify an overall bias. Like we're above the weekly range, there's a bullish bias, and if we're below it, there's a bearish bias. Yeah, that's a great way to look at it. Dave says, I'm dropping DAX for copper, at least for the next 60 days. Yeah, just be careful of the copper dry out in July, because right now, okay, so here's the thing. Watch 9th of July. We're probably going to be okay until about 15th of July, because we have some tariffs news. So we're going to have the tariffs that need to be resolved, and that's going to be happening on the 9th of July. Copper is extremely sensitive to anything tariff related, so I do think we have a pretty decent summer in copper up until the tariff focus fades. So keep an eye on the C-vol. I don't know whether you read the market profile for copper on the blog. I posted it in chat. I'm going to post it again, because if you haven't, I do talk about the C-vol in there. Here it is. So have a read, and there is a link in there for the C-vol on CME. You do need a free account, okay? So in order for them to splatter the actual grid for the C-vol numbers, you do need a free account. So just sign up for the free account, log into it, and then go to that page from the blog post and find copper. It needs to be above 22 in order to be viable for intraday. If it's under 22, leave it alone, okay? Because you're going to find yourself watching paint dry. It's like a gate. It's my gate for whether I should be trading copper at all, right? And again, it's a pretty detailed article that I feel has a lot of value. So if you've never looked at C-vol on copper, you need to have it as a part of your analysis pre-market. Christian says, good morning, big pimpin' with the glasses. Yeah, I'm a little bit light sensitive after the prop expo, so this is, but they look good, right? Why not? A bit of swagger, you know? Hiding the tired eyes. These single prints are a little bit tricky, but we still have some people selling here. We had 18 contracts that somebody took off here, so we may not get the, let me go a little bit more granular here. We may not get the full VWAP target, so I may have to take this off early. Yeah, let's kill all of this. All right. What's the time? So we have gold opening. Let's look at gold. So I'm going to hang around here for another half an hour. Then I've got a dog walk to go to. Do you have a puppy cam? Oh, nobody's on the puppy cam. Everybody's on the floor, probably because they're hot. Because, you know, the heat wave is over, but it's like, it's not exactly cool. We had a bit of rain. That was very nice and refreshing. What are we doing here? Nothing. We've opened inside value, tagging value low. We have a weak put wall in and around this area. Yeah, so we might be in a situation on gold. I'm not liking what I'm seeing on gold. This is a chop zone. So we might be chopping between 40.25 and 40.50 for the remainder of the session. So if that's the case, I'm going to be looking for the evidence of us to remain range bound. And then I'm going to adjust my strategies accordingly, looking at the developing value high and low for potential entries, swipes of the London high. That's another setup. But yeah, this is a chop zone. Like we have negative gamma, but stuck between two areas that could cause trouble here. So yeah. On the other hand, if this DAX does manage to end above the single prints, maybe there's a long continuation trade there. Could be the next trade. Let's have a look at gold here. Oh, gold is so wicky though. I really am not too happy with it. And then copper, I have to wait for 90 minutes to go by, or at least, yeah, at least 90 minutes. Yeah, there are no good levels here. We're trying to accept Asia high range as well, but they're not really initiating below this nearest put wall. That makes me think upside, but again, it's limited by the fact that we smacked into 40.50 where the call wall is and just reversed. You don't want to see that if we're going to have a really, really nice, decent day. Right, maybe let's do another DAX trade because those single prints are being reactive. And again, I'm not going to be pedantic about my entries. I really couldn't care less. But I am going to only enter a couple of them. See whether we can go back up. Let's change back. So why am I considering this? It's not just a single print, it's the fact that some institution just took profits here. obviously we can't know that that's what's happened, but from the context of a sell-off and then, you know, smacking into a low volume area, we know that the market will do two things. It will either slice through them, or they will reposition and use this as kind of a dip in order to run it back up, because it's an equity index and it has a strong upward bias on most days. And I think that the correlation between gold and equities is positive today again. It went like negative for a hot second on Friday. And we have a very, very decent amount of space from the London value area. So we're very far away. We didn't even tag it during the London session. And the London value, the New York value high is very low down. But on DAX, New York is actually an out-of-hours session. And again, if I can get a little bit of commitment here from someone with bigger pockets than me, maybe I scale in. But because I'm scaling in 100% to my full position size of 2 on DAX, I don't want it to run away from me too much. If it runs away, it's fine. I'm not going to chase. But yeah, I just want somebody to kind of go, yep, we're going up. Everything's a bit sluggish at the moment. All right, let's go to go. Just add a little bit. Oh, must be some cows or something. These lines are kind of like the middle price point of whatever swing they did earlier. All right. Delta is pairing off. You can't see it because I'm blocking it. My mug is blocking it. Let me remove myself for a second. See this squiggle? So we went all the way down. There's some orders that went off. And then since then, we've been kind of trying to pair off a lot of that delta. Doesn't always have to be the case, but generally it's a decent little granular signal that somebody is also looking to buy here. So see if we can push this over 6 grand or maybe 7 grand by the end of the day. I don't think it's going to be like one of those days when I'm smashing 12 grand, 14 grand in a day. But you never know. Copper might be the one later. What's up, Bon? Bon is getting very excited about something. Alexander says, Dee, what do you think about ICT and SMC? Not the culty stuff, but some of their concepts and ideas. I mean, look, for a price action concept, it is valid, because what is it looking at? It's looking at effectively single prints on low time frames, right? So it's the same thing that I'm doing here. So I'm like, oh, there was a single print there. Let's have a look at if they chew through it, right? So that would be the FVG. Now we have, I think this would be an IFVG, like an inverse, whatever. But to me, because I'm so old, right? So to me, that's all just single prints, profile theory, and every time I'm seeing those, I feel like they're too deep into just the reactionary price action without context. So the only thing that I would say is that I prefer to run my trades with more context. So that's why I focus so much about on the dealer flow, whether we're in negative or positive gamma. So that will either bring, you know, amplification of the moves, or the dealers are going to be dampening the moves. So anytime you get a rally, you're going to get a reversal. So it's like more of a mean reverting price action. If you run into a big gamma wall, you need to know that it's there. If you're opening with a gap from a previous session, you also need to be aware of that. I kind of feel like they call it the smart money concepts, but I don't feel that they're actually using smart money. They're using a very small chunk of it, which is the reactionary price action around it. And that's the reason why I personally don't really like it. And anybody who's like serious about order flow, they will not be considering those concepts, because there's so much more depth elsewhere in concepts that have been much older than whatever they came up with in the last sort of six years or so. But I can appreciate that those concepts have definitely given structure to a lot of people, so full props there. And I will say this: do you find it useful? If yes, continue using it, regardless of what I feel or how I feel about it, right? Do you find it useful? Are you finding success with it? That's the only thing that matters at the end of the day, okay? I'm going to splatter my code again. Grasshoppers, grasshoppers, grasshoppers. So you don't want to be grasshoppers, anything that gives you structure, right? That's a good thing. And, you know, any concept that can provide that, I can get behind it. I won't be using it myself, but, you know, if it helps people, I'm all for it. I'm not for the MIB stories and a whole bunch of other weird shit that goes along with it, as you know. But yeah, as a concept away from all of that, it definitely has merit. What am I trading? I just tuned in. So I got smacked in the face with crude oil. Well, bot and me. Now I'm trading DAX. So this is my second DAX trade. We were on the short. Now we're long. So this is the German 40 biggest companies. It's a DAX 40 index. It's kind of like the ES, but for Germany. And we're trying to fade the move with the overall extension of the initial balance. After running through one set of single prints, smacking into a second set of single prints and struggling and then reversing. So that's the trade. It's a continuation of whatever story they started earlier in London. Alexander says that makes so much sense. Yes, I find it useful as a gaming structure, but auction theory market profile is more elite to me. I try to draw the best from various sources, always learn from you. Yeah, exactly, and that's what you should be doing. We are all, at the end of the day, once you get into this industry for many years, just a mishmash of things that we've come across along the way. We kept what we resonated with, we threw away what we didn't resonate with, and hey presto, that's your approach. So whatever works, man. Again, test it, forward test it, back test it, know the functionalities of your setups and have some sort of a structure, and use whatever works for you. You know, I'm not purist in that regard. Like, yes, I teach people my way, but there's nothing to say that there are other ways of doing things, for sure. There's a million ways to do it. And that's the beauty of trading, right? You can trade profitably a million different ways, literally. Trading nickels, so you're touching the stove there. Glad I got out of my positive gain in platinum a couple of hours ago. I haven't touched platinum for months, ever since it went insane. I'm still waiting for it to be a little bit more palatable with the volatility. So I've been mainly trading copper, like all the big P&Ls that you see on my Instagram. They've come like sort of 70-80% from copper, and then the other sort of 30%, a mix of MGC and CL, and that's it. DAX, this is like the first couple of trades that I've done since like 2 weeks ago. And I don't trade DAX every day. To me, it's like, sometimes I will find trades, but it's not like, oh yeah, what's DAX doing? Sometimes it's just doing absolutely nothing. So I don't want to trade when we're watching paint dry. We'll have enough of that. Right? A little bit more commitment here. They're pushing. They are pushing. The delta's pairing off even more. See that? Do you see that spread? How it jumps ahead of the price action? That's a beautiful thing. Love that. I swear all us traders are a bit nutty. You can't be normal and do this job. Alright, so we're pushing over 6 grand, just about. Yeah, not the easiest day, but hey, it's alright. Shanghai and copper were pretty tasty. I think next week we're supposed to have a another mini heat wave, which is not going to be as bad as this one. But what I'm going to do next week, let's do Tuesday and Thursday, but make it Globex. Okay, so, and technically it's probably going to be Wednesday and Friday for me because it's going to be so late. And I'm probably going to be starting the stream about half an hour into Tokyo. So I will be obviously doing the regular Thursday this week. This is a short week because it's a holiday in the US, obviously Independence Day. But next week, let's do 2 Globex sessions. How does that sound? And it's also going to be metal specific because obviously Asia trades a lot of the metals. Trading nickels, yes, I haven't traded platinum for 9 months. First day back, okay. What's the range in it? Where's Bob? Bob is over there hanging on the wall. Yeah. Short story vibes. For copper, can you share your thoughts? Would you wait too long Asia low? Let's have a look at copper. So for the afternoon session in copper, I have a very specific strategy where I like to fade it. So for example, now we're going through the initial balance, right? Once the initial balance is over, I actually will wait for it to get broken. So no movement, doing nothing, don't touch it whilst the IB is being formed. Read the article that I posted. Let me grab that again for you. And you will know why I'm doing that, because statistically, copper likes to fade things in the session for COMEX. So I wait until the IB is broken, and then I will be looking for the fade. If you get a pin bar upon the breakage of the IB either side, wait until they retest the low or the high of the pin, because it's not an equities index, so it will retest that. So you have to take in how the structure was created, as well as, that's not in the article, that's just me talking to you. It's just basically what I do. Pin bar to me is a dangerous thing, so you don't go in after a pin bar, you actually wait for another sort of swipe, liquidity sweep, under or over it, and then you fade the initial balance extension. Yes, sometimes copper can go into single direction days, but for the most part, it will be a fade like on like 70% of the days. That is the trade. Anything else, copper generally properly trends where it keeps creating new higher highs into the next session. So Asia makes a high, London makes a new high, COMEX makes a new high. That happens like 5% of all of the sample size when you look at the last 5 years. What happens 70% of the time is that it fades the extension of the IB. Okay? I'm going to have to bounce because, again, we've got a scheduled walk, which is a private dog field. So unfortunately, I can't stay and look at this forever. So I am going to take profits here at just under 6K. And that's all right. We can't always make 8, 12, and 20. But yeah, so I'm going to be still looking at copper, and that's probably going to be my last trade for the day, but I have to wait for another hour or so before I even start looking, because I need the extension of the initial balance. Maybe even 2 hours. Maybe I will enter a trade closer to the London close. I don't know. It depends how it all sets up. So that's going to be it for today. Bit of a, obviously summer, so it gets a little bit tricky. Asia's definitely been my main session recently. And DAX is pretty nice, but right now we're getting into that pre-market New York session, and this could get very jumpy as well. I will see you again on Thursday, so be there or be square. Until then, trade safe. It is a short week, so if you have some profits by tomorrow, don't squander them on Thursday, because Thursday is like a fake Friday, right? And just try to hold on to your profits into the long weekend. That's all from me. Thank you for being here. Thank you for sharing your time with me, and amazing that I got to meet a lot of you at the Expo. So yeah, let's keep those friendships going, and I will see you all on Thursday. Take care.